What's an interesting play today? Where do you see investors say, well, we need to do this because it is really interesting? I was wondering, La Défense is one of those, given that the repricing, the value per square meter going from 12,000 to about 8,000. Is this interesting play today?
It's always a question of pricing, as I say, but I think there are many opportunities in the French market, like in other markets. And as Christophe said before, depends on what we didn't talk about hotels. There are a lot of people coming into France because they think that as politics are difficult, regulations are multiple and adding on every day. But tourism is exploding because the Asians not only come as investors but also as tourists. And so they think that there is not enough hotel accommodation in Paris. They think that the retail rents in the main shopping areas will, on the high street, rise again. So there are a lot of people who think that hotel or high street retail in Paris is going to explode, and where they think it's a play. You have others who think that logistics are for them a play because of what Christophe said before, because we have this new retail behavior for everything which is probably not high street retail with internet. So that can be a very interesting play. Depends on where you are, what price you buy it for. It's always the same. Transformation of office into residential can be a very interesting play, but you need to find the right opportunity to do it. And offices stay in France the most important asset class, and you will always find opportunities on development schemes. And you know the proof is that when you have a development scheme in a very good location, before what was it? It was something where a value-add investor tried to secure that deal, and they knew that they had their margin in the end because the location was good. There was not a lot of letting risk. What do we see today? When we have very good location for that, for a speculative development scheme, we have the life insurance companies doing it because they don't consider there is a letting risk because they know their market. They don't need financing. They do it with equity, and they see it as a very long-term investment, which means that the yields that you will achieve, for them it's enough. It will be 100 basis points or 150 basis points higher as if they would have bought it as a standing investment. But it doesn't allow for the margins the value-add investors were used to have in France. So you need to find them elsewhere. You need to find them in redeveloping properties. One of the 70%, which I don't know where they are, but the 70% of obsolete buildings. So there is always opportunity, but I mean, it's difficult when you fix yourself to stick to one strategy, I think.
And I think it's something which is very, and we didn't discuss that, but which is very amazing this time on the French market is we see US opportunistic funds competing with insurance companies, which never happened in the market before. You know, before we had the opportunistic cycles, so where Whitehall was, winning a deal, and then it would be Mesref, and then it was. But this time, all kind of investors are competing for the same asset, which is, I think, something strange. Sometimes. No, great.
Well,
but which means
not so much, because it has been always the case, for example, in Germany.
Yeah, but for France, it's very new.
It's very new, yeah.
But which means that it can give some opportunity for the opportunistic fund, like. Sometimes opportunistic funds, they have the capacity of doing large underwriting, but when they underwrite a large transaction, they are already trying to flip some assets to insurance companies. So they are doing their margin very quickly and more than you could imagine. So we see that more and more.
I think this trend is brought about by maybe other pressures. One of the big German funds, one of the big surviving, powerful German open-ended funds, was telling us recently, the people to whom we've sold one or two things, were saying that they, in the shopping centre area, for example, all over Europe, they are having to look at value-add opportunities, risk opportunities, because they're fed up trying to compete with Asian capital and let alone domestic institutional capital to buy good product. Yes, they, of course, they're entitled. I don't want to be a moaner and groaner about this. They're entitled to do this. Whether they have the real expertise to take on development and turnaround is another matter. They may be doing joint ventures and so on. But really, I think it's born out of the lack of, rather the competition to buy stabilized assets, which is what they should be doing. After all, they're targeting 4 to 7%, stabilized income returns, and you don't get that from development, I'm afraid.